Okay. Well, let's see here. Let's see here. Copper. I wish there was like a live update, but so most of it was August 1st. Well, 14 countries. That's not most. So the Trump administration will be releasing a minimum of 7 countries having to do with trade. What does that mean? Releasing. Tomorrow morning. Trump wrote in a Truth Social post on Tuesday evening. An additional number of countries will be released Wednesday afternoon. What the? Why? While the wording of Trump's post was unclear exactly, what? He appeared to be suggesting that he will repeat his actions from Monday when he shared screenshots of letters telling 14 countries that they would face steep tariffs August 1st. Which didn't really do much to move the market. Just kind of chopped. The rates for each country range from 25 to 40%. The letters note that the U.S. will perhaps consider adjusting a new tariff levels depending on your relationship with your country. Many of those rates are close to what Trump had imposed as part of his Liberation Day rollout, which set a 10% baseline plus some other stuff. I'm just reading right now. That reprieve was set to expire Wednesday, which was the 90-day window, which is today. But on Monday, Trump signed an executive order delaying the tariff deadline till August 1st. Oh. In another post earlier Tuesday, Trump asserted there'll be no change to the August start date. No extensions will be granted. Well, we'll see about that. I mean, he can only kick the can so much before people stop taking it seriously. So he needs to I guess he needs to just focus in on it. If he wants it, he's got to just say, yep, it's going to be this, the deadline. So the question is I thought that the tariff, so maybe he's saying all the tariffs then. See, that's what I was asking about on Monday, and I just was really unclear. Because it was the Besant, it was the Secretary of the Treasury who had come out and said August 1st, but then he had sent, I guess in addition to that, what is this? All right, so I can't be the only one who's this confused. I feel really dumb. Hey, what's up, guys? Yeah, you're not wrong, but you're wrong. Like, that's what I'm trying to say, is that it doesn't make any sense because it specifically said there's two different pieces of information. Like one is saying that all of them are delayed because he signed an executive order delaying the tariff deadline until August 1st. In another post, he said there will be no change. Simple as that, right? August 1st. That's it. That's all there is to it. However, he then also on Monday said that he had sent letters to 14 countries saying they would face steep new tariffs starting on August 1st if they didn't sign up. But in addition to that, it also says we will be releasing a minimum of 7 countries having to do with trade tomorrow morning, which I don't know what that means. When I hear that language, to me it sounds like if I didn't know about releasing news or letters, I would think that he's releasing them, like he's taking them off the table. But that's like good news. If it would be like, hey, we've got deals going, we're going to take them off this list, that's releasing. But releasing letters is completely different. But he says an additional number of countries will be released Wednesday afternoon. So it's supposed to be this morning and this afternoon, but I haven't heard anything or seen anything. So right now, I'm not really sure what to expect. So it sounds like he's saying he's going to send more letters this morning and this afternoon. And that most of everything else is going to be just, again, all of it's just really August. So it didn't exactly send the market into some kind of a massive rally, though, did it? I mean, when you look at Monday, it's kind of just propping it up more. And we had talked about going back up a little higher. And yeah, I mean, hmm. Well, so I guess the question is, how does that affect the market? Does it give us another boost? Does it kind of send it a little bit down? The only thing I'm seeing here is the copper imports. I'm just reading. Maybe he's saying that maybe what he's releasing is actual trade announcements as opposed to just new tariff rates. Because that would be very bullish. Or it could be bullish, I should say. So So dumb. Can you turn it down, please? So I guess I'm just trying to clarify. If the rally itself, if we're basically giving ourselves the extra window to continue to move and have those announcements until August, versus what we saw right afterwards, which was, hey, we're sending more letters that were in some cases more severe. In other cases, they were less severe. It was just determined by the country. I mean, some of them were actually lesser tariffs, although not by much, and then others were slightly more. Again, not by much. There wasn't a huge amount of change. Yeah, see, he backpedaled because Secretary Scott Bessent said Monday that they would be within a couple days, which would be today. But then right after that, Tuesday, he said we can do things over the years. Deals are mostly my deals to them. We're picking a number that's low. Markets are probably right to ignore Trump's latest tariff flip-flop. This economy says, while continued noise around tariffs could well generate some volatility, we think the bar for other major sell-off remains quite high. Yeah, I would generally agree with that, except that the market is pretty overextended, in my opinion. All right, well, maybe this is a nothing burger day, because I mean, so the title of the video says Trump Tariff Deadline, which makes it sound like I don't know that they extended the deadline, which I do know because it was announced on like Monday or whatever that they were going to continue to negotiate through August 1st. However, they had made these announcements and they'd made these announcements that they were going to release more information. And that's really where that's really where the confusion is. Well, look, man, I'm reading and it's like every other day the comments seem pretty different, which is, I hate to say it, but it's just a lack of a singular voice. When you have things like Twitter as your main form of communication, or X and Truth Social and whatever they use, it muddies the water a bit, I think. I think you have a lot of people kind of speaking over each other. They're just kind of speaking whatever they want to speak. I mean, they're supposed to have social media managers, but I doubt they really care that much to listen. It would make a lot more sense if it was one spokesperson who could be the speaker, or the press secretary, for example. Although she's usually running around trying to defend everything that everyone else is saying and trying to make it seem like it wasn't actually confusing. 90% of the press secretaries' things are just this isn't confusing at all. You guys are just dumb and you're making up stuff. And I'm like, no, it really is confusing. I'm not, that's called gaslighting, by the way, where you try to make other people think that they're crazy for believing certain things, or you try to make them believe certain things. So the idea that we're all we're just a bunch of nincompoops who can't understand it, and only the people that follow one news source or something, I don't even need to tell you what that is, only the people that follow just this or just that. But it's if you have no clarity in the way that you're speaking about things, on the one hand, you're saying you got an August 1st deadline extension. On the other hand, you're sending additional letters, and then you're saying they're going to release countries. It's what does that even mean? Why can't you just say Are you releasing new letters that are going to say, hey, we're going to do more? Or are you releasing trade deals? Context is very important. And I'm lacking context in a lot of these little blurbs. And that could potentially be blamed on some media outlets just not reporting it very well and just throwing out the quotation marks and saying, well, he said this, but he's not giving you context. He may have been talking to a reporter or something. In the case of like social media, usually not talking to anybody, but it could have followed like a previous post that may have given more light to whatever that means. If I did not, and again, I don't know, so this is me just speaking just English. Like, without context, saying that we're releasing 7 countries could mean like 3 different things. It could mean that you're going to release trade deal negotiations, like, hey, here's the deals, they're good, we're done. That's great. It could mean that you're releasing them, which, literally means like we're not going to hold you to this, which seems very unlikely. That seems like the least likely of all of the 3, right? That's probably not happening. Or we're releasing them like we did the previous letters, and we're releasing new tariff, standards that are going to have to be hit by August 1st. Take your pick. Now, somebody who's like sure of themselves is going to say, well, I think it's definitely this, right? But I'm like, I just can't read into it that much. I have to just say I don't know. It's the Schrodinger's cat. So today could end up being like a nothing burger day. Could end up being just, we were maybe expecting some kind of volatility in the market. We're not going to get it. There could be some pretty major news today. If it's just hey, we're releasing new tariff. Excuse me for coughing to the mic. If it's just we're releasing new tariff deadline information, that could go over like it did like on Monday, which was kind of just, okay, whatever. It's pretty much the same. Let's just keep going. We just kind of gloss over it. It could be very dramatic. Copper, 50% tariff on copper imports. Copper's already extremely valuable. I find that one to be kind of curious because you're going to make the price of copper skyrocket. And that one's interesting to me because I'm wondering, I don't know if you guys have had any copper repairs lately, where you have to repair a copper pipe or something like that that's busted, maybe in a water leak or whatever. But I had that happen a few years ago, and it was very, very expensive. And I think part of it was a little bit extortion on the part of to be fair, on the part of the plumber. I don't think it was just the cost of the materials. So I'm curious, with that import tax, how does that kind of filter through the system? He's going to tell what he's always told, which he's going to say, well, the people that are trying to drive it into the country need to pay the tariff. But the reality is just not that simple. It just isn't. And you've had Walmart, you've had Amazon, you've had others these are not small companies, right? And Walmart specifically was a really interesting one to follow if you didn't follow that, because they didn't really backpedal on any of their comments. All they just said was like, this is the way it is. They don't make that much profit. People think that they're just rolling in the dough. They only make a few percent, but the reason that they're so profitable is because they sell so much. It's such a massive quantity. So you look at their bottom line for profit margin, it's pretty weird. You would think Walmart would be like this huge, like we're making 50% on everything because it's so, cheap, made in China and stuff. But the truth is that China for a long time hasn't really been a wage. People think that they're paying people like nickels. That was the case back in the day, 10, 20 years ago. It's not as much anymore. The wages in China have consistently gone up, and it's not as cheap as people think. When you talk about what happened with Apple, they just went to India. India is like the next China kind of deal. Like they're this very big, huge population economy. They've got a lot of specialists now. And America just doesn't, which is another thing. Another reason why a lot of companies are reluctant to bring their business here. People think it's just, well, you just need able bodies, right? So what? You're paying them a higher wage. Who cares? Got to deal with unions, whatever. But there's all these fun little things you can do, right, with AI and robots and all this junk to cut down on costs and still give Americans jobs. But the thing is that we don't have like fabrication specialists. And like China has like millions. Like, I mean, it's just crazy. So if you go look at engineering fabrication specialists, for example, you might find one person for every 20 people in China that are like that. And that's a big problem when you have to meet demands that are very high. And then, so if you suddenly have like an influx of demand, in order to get those qualified workers in America is much harder. And so the solution ends up being, unfortunately, like costs to the consumer, right? Most of the time. Or you're just bringing people from other countries here to work. And it's like, that's not the point of the whole thing. Anyways, there's a lot of complications to it. And I don't know if you guys read recently, but there was an interesting article about Google, and now they did the Motorola X or whatever, Moto X phone or whatever back in, I don't know, about 10 years ago or something in Texas, and why that flopped. And it only lasted a year. They had production for 1 year, and they just couldn't, part of it was like they just didn't have enough demand, and they kind of attributed a lot of it to that. But it started with like a huge number of employees, and by like the end of the year, they had cut it by like 2/3 or something, and then they just shut it down, and it just didn't work. And that was an American production plant, and it's an interesting for phones. It's an interesting case study. Again, it's not all because of, again, American workers or cost or whatever. They figured out ways to make it work. The iPhone's a bit different for a number of reasons. Anyways, what was I going on about? So it's talking about Walmart and how they were saying, well, like, you can't just like make this money disappear. If it's going to be from the other end, it's challenging. In some products, you think you could do it, get away with it. Other products, you can't. And that's all been written. That's not my language. That's their language. I mean, you can go read about it. I'm paraphrasing. So I'm very curious with the copper, because copper is one that's already really valuable and expensive. I'm really curious how that affects really a number of things, because we use it for all kinds of specialized equipment and manufacturing needs here in the U.S. And copper is not, in some cases, is not replaceable. It's not an easy thing to just like swap out. So Jerome Powell is expected to step down in the coming days. He ain't gonna step down. I would be genuinely surprised if he stepped down. Why would he step down? I saw the news and went and bought a bunch of wire. Yeah, because it's like, it's not replaceable. Like, you have to use it for certain things. So it's like, that's a strange one. Yeah. Well, I've been pretty clear about my feelings about Powell, and I think it's divisive. I do support what he's done. I don't think he's done a bad job. But there's a lot of people who think that he is late, that he's not acting. They look at certain numbers and they say it doesn't make sense. Why wait? But it's verifiable. Like, inflation is kind of stuck. It's not complicated. And then the big thing that I hear from people is that it's just not that complicated. And then like the idea that pretty much every economist in the world is suggesting that tariffs do in fact increase inflation is not an opinion. Like, a lot of people say, well, that's just your opinion. We don't know that. Well, yeah, you don't know what you don't know. I mean, certainly we don't know because of the impact of the present tariffs, how it works. That's true. The lurking variable is, what are these rates, right? Once those rates were announced, everybody was like, crap, they're really high, Is this going to work out? But it's not an opinion if you look at historical fact. The tariffs haven't been raised this high in like 100 years, but there have been tariffs. And they have impacted inflation. And there were tariffs in Trump's first term. Like, tariffs tend to raise inflation. They tend to make prices go up. That's not like an opinion of radical leftists or something, or, biased economists. It's just looking at history and the math. It's not that complicated, And I don't find what he said to be disingenuous. I feel like it's a really strange thing to me that he's been blasted as much as he has, because considering where we were, they may have boggled a lot of that initial stuff when Biden put a lot of that money back into the economy because of and that really kicked inflation into high gear. And nobody would disagree with that. But like, since then, what have they done? I mean, look at the market. Has the market fully capitulated? No. It's recovered. It's doing all right. The economy's moving along. And ironically, that's the funny thing about it, is like, that's not even the argument, right? So what's weird is if you say that on the one hand, Powell's done a bad job, well then how can you then agree with President Trump when he says that the economy is fine and ready for rate cuts? Do you see it's like disconnected. It's a dualistic comment. It's a double-sided sword. You can't on the one hand say the economy is strong, inflation is good, but then also say Powell's doing a bad job. Like, it doesn't make any sense. Because Trump hasn't been in office for the last 4 years and dealt with the inflation. Biden was. And Powell was the chair of the federal committee. So it's like, I don't understand, like, the central bank, right? So like, I don't understand how you can have this sort of dualistic opinion of Powell. It just doesn't compute to me. I'm not saying everything's robotic, but it seems wrong. So if he's criticizing Powell because he says, well, Powell won't cut rates and he's doing the wrong thing right now, that's fine. But you can't also say that he's a terrible, dumb person, which is kind of what the president said. He said he was dumb, like a child, lobbing insults at another child. He said he's not that bright upstairs or something. I don't know. I'm paraphrasing, but I'm like, okay, but he's not. If you think the economy is good and everything smoothed out because of, like, you'd basically just have to ignore the fact that there was ridiculously high inflation. Then he didn't have any impact on that at all, him and the committee. And that just doesn't make sense. So it really, to me, it's like a tip of the iceberg attack. It feels like you're not doing what I want you to do, so I'm just going to label you as an idiot and use mean words, things that I would say are potty words for my child. And then, I don't know, but that doesn't make any sense to me. You can't simultaneously say he's bad at his job, but then look at the last 4 years and argue that the economy is also good enough to cut rates. Do you understand? Like, I think, to me, that's the most silly thing I've heard. So that's my opinion about him. I don't know why he would step down. If it's just pressure from the president being the president and being who he is, okay, maybe he's just done with it. But he went to a central banking conference with like the European Union central bankers, and they basically like all agreed with him. Powell did. He did not come out and say, you need to agree with me. It's not his style. He was just there. he gave a keynote thing or something, or a little thing, and then everybody was asked the question like, well, how would you have responded? And the Central European Union banker or whatever was like, I would have done the exact same thing he's doing right now. And we just wait till the numbers come in, because you don't know what you don't know. So this idea that he doesn't have any support because the president is lambasting him is really not true. The central banking community in the world over has agreed with Powell on his approach. The only people who are starting to kind of dissent from that, I think, are people who are feeling the political pressure. And maybe to some degree, they think that it is time, But think about it. Those opinions on the committee haven't changed until recent months. That's it. 6 months ago, they were all kind of saying the same thing. Well, there's tariffs coming. We need to wait for policy changes. Now some of them are saying, all right, well, maybe it's not going to be that big of a deal, but let them vote on it, they're a committee. It's not just him. And that's another thing that bothers me is everybody thinks, well, he's the chairman, so he's the one calling the shots. It's well, not really. He's there, but it's still democratic. They're still working together. That's why they talk about, and you read their notes, which I think are coming out today. You often see that some people are dissenting, almost like a court opinion. Anyways, so I'm looking at SPY today. I'm not really confident that this is going to continue to go up. I think that I've already mentioned this, but I think that this is already primed for kind of a sell down. But I did say that, and would not be surprised if this has a final rally here. And the main reason is that the RSI on the 4 hour is already turned down. It's underneath the moving average. This is very similar to previous patterns. Doesn't mean it has to be the exact same, okay? That's never what I mean when I say that. I'm just saying, if you go back and you look at what happened here, this is the same time frame back in July. If we were doing a comparison, we might say it's almost like this July 11th area to some degree. But there was a very obvious divergence, there's a weakness, and then there's still a final leg up into July. But once it peaks on the 16th, you get this big turnaround, and then it's dropping. And you can see that the RSI had already dipped below and was trying to come back up. The price of the ETF here, the S&P 500, is fine. I mean, it's going up, but the RSI is very clearly failing the strength index, okay, on the 4 hour. This is just a really easy way to see a similarity, because we have something very, very similar right now where, yeah, it could keep going, but it's already done the divergence. It's already kind of done the final extension. I'm just not confident it's going to just rocket from here. You can see it's a bit of a narrowing range as well, starting back on May 23rd, I guess. Nothing crazy, but if it drops through, I think the recent uptrend, I think it's going to probably capitulate a good bit. And more than likely come back to 600, because it hasn't tested 600 as a top. At the very least, you'd come back and retest the 611 area where the all-time high is, and there's a gap there. So there's a lot of gaps. There's a lot of weakness here. I'm looking at this right here, and I'm like, I mean, it could do something different. It could have a push-up that breaks above again and just keeps going, but considering it already had the divergence, it's getting that last leg, what looks to me like a big, final up thrust. Again, I think we're really close to the top, if not right on it. So I'm expecting, again, maybe a little more rally, but overall, and that could be news related, right? But overall, I'm thinking that we're probably close to done here with this. And from here, he's you're just looking at retracements. Nothing too crazy, not like a rug pull like what happened back here. I don't think it'll be like that. Personally, I think you're going to have a more mild retracement, maybe some sideways into August here, just some chop. But that's me, Other people may be looking at this saying, I think it's going to hit 650. That was sort of the highest point that I had. 630 was the more realistic one. That's based on this other S curve that comes up. And these have been on the chart for a while. So it's, in terms of like health of the market, I see the same thing with IWM. It's already at 222. 220s was my target. So, I mean, if it goes, great, but I'm doubtful. I talked a lot about AMC and GME yesterday. I'm not trying to avoid them, but GME was one that we kind of went through late in the day, and usually we don't have as many viewers, and so typically I think a lot of people miss it when it's like later in the day. And I had a lot of reasons for kind of resetting the chart again. I don't reset it in order to like do something completely new. I usually do it because my chart got too messy and then I just don't want to clean it up. So I just scrape it all off like a Etch-a-Sketch board, right? Just wipe it and do it again. But I don't think that it's necessarily in a position of strength right now. I think that the bottom itself yields a high probability that it's going to try to get to this 26.5. And I made an argument about it yesterday with a waveform. I'm not positive the timing is correct here, so don't look at the timing and say he thinks it's going to be there by Friday the 18th or something like that. That's not what I'm saying. What I am saying is that this is generally like the form that I think it takes. And I do think that 26.5 is probably the right target. Now, that being said, for GME, we did do some timing and it did work very, very well. I'm using kind of a new, I don't want to say it's brand new, but I'm using kind of a new method to measure timing here because it comes from other things, sort of a derivative, but there is a really decent chance that it is by July 24th if it's going to go up there. However, that would mean that you've got some sort of leeway time in between. Potential downside here is definitely a possibility. I'm not particularly concerned about GME at all unless it drops beneath 2150. Then we have to sort of analyze it based on how low it goes, yada, 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 whether that's a big sign of weakness, so on and so forth. For now, I think it could dip as low as 2210, hit that gap fill from back here, which was on the 16th, and it would be fine. If it drops below that, is it necessarily like an SOW on the big picture? No. And we went through this yesterday because I knew that it was a bad place to go. I really don't want to have to go all the way back down to the floor. And the main reason for that is that there's a rising trend here. And this is kind of the last ice that we have. We don't have any others. So I'm like looking at it like, if it drops, it would be really hard for me to sit here and try to make an argument that it's still healthy, right? And that's right there. And so if it comes significantly below that 2210, it is a challenging argument. There's a creek cross here, and I don't know, it's a lot of noise on this chart. There's a creek cross here coming down, and it does land you into this pocket. I think I would accept a sort of a spring loaded dip down that came back above 2250 afterwards. That would be fine. Or what we had drawn out here, which was a reaction that kind of comes back up and meets this this trend. And this trend is really, again, I'm not saying, it's necessarily 1000% correct, but what I did here is I did an S-curve up. Now, an S-curve up does not mean it has to go up. We know from experience that a lot of times those S-curves fail, and if they fail, you end up with a M cross that drops, so it drops back down. So that could happen over here, but it's just a measurement. But what I did is I took the triangulation from the wedge and I created a center mark, and it ended up being exactly right. So you have, if this is the center mark on the wave, which is the triangle, right, your rising wedge, and then you take a measurement from the end back to the same middle drop point, that is halfway. So it's a perfect quarter system. It's really nice. So I think this is correct, even if it doesn't follow this blue line. And look, it's not, right? I said it might make that up thrust, it might not. It had possibility here. It did make an up thrust right there. Did it go higher than that mark? Nope. But it made an up thrust. It went higher than the little range down here for sure. Right? First thing this morning, and then it drops down. So this was the support we knew we would get. We got it. But at this point, if it fails to cross the creek here, it could still drop. Again, this is something that I'm not really concerned about so long as it rebounds off the bottom here in the right spot. I don't really care. That's why I had both of these on the chart, because I was like, it really makes very little difference. You're going to come down here one way or the other at some point, more than likely. So timing wise, I think it's pretty likely we're going to get up to 26.5. And then when you take that into consideration, you just kind of look at different alternatives. What we did yesterday was we went through in a more simplified way and just sort of analyzed where those higher probability zones were depending on what happens. So if it distributes off 26.5, there's a good chance you're going to come back to 18, the 18 area, like 1880s, 1890s. And then, yeah, it's potentially as low as like 16. I've obviously heard a lot the 17 number. I think that that's not completely irrational. I think it's sensible. There's a gap that started down here, and I think a lot of people are looking at that as like, well, that's going to be where it is, right? Yeah, to some degree that's a spring because this is the lowest it's gone before. If you read this early dip, the one that happened back in May, there was a similar one on AMC. The one on AMC was more, what's the word? In line, I suppose, with the rest of the chart. This one doesn't feel like as severe, and it didn't come that low. You could read that as a sign of weakness that suggests you definitely are going to come below 18, in which case this was a UT, and then this is just going to keep dropping. And I think that's the way a lot of people are reading it. I would suggest that if it's going to go down again, it's probably going to need to make that rebound and really show that we're not going to go above 26. Because when we dropped the creek here, we didn't check it, and we haven't yet. So I think there's a strong possibility that even if it does go down there, it's going to come up first. It is. But then we kind of we ran through the whole thing. And I know there's a lot of scenarios here, but what was interesting is that it's all kind of boiling down to like what happens in the current time frame. Because if you get certain signs of weakness or whatever here, you could end up with a drop later, like it's a higher probability. If you don't, then there's actually a pretty decent open window here to kind of just make an advancement. And ultimately this number, which is around, in this case, this one was October of this year, around the $80 price target, which was we went back and we're like, well, that's just where we were on the extended motion. This does seem to be the wave. So I'm looking at anything downward here as a potential slingshot, and I'm being very serious about that. Because if this ends up being a spring, that's where it's going to go. It's pretty simple. Now, that's not all-time highs. That is higher than the opening price that we got at like 65. It's not all-time highs, but it is a level of contention that would probably be a good place to test. And I don't want to get any deeper into it right now because it opens up a door for like a bigger liquidity test later. And I have a lot of reservations about this and like why this could happen, why it probably wouldn't, like all this other stuff. But this area right here is just a secondary distribution level. And it is the right spot at the right time. And this goes back to some of the very first bigger charts that we did. And I don't know if they're on here right now. I'd have to see. For GME, but we had talked about the potential of like this kind of bouncing out and coming down, and it just sort of went the other way. But now we're kind of coursing backwards. It's like one step forward, two steps back, right? And the way these were measured was designed to give you a sense of understanding of direction on the big picture, right? Versus like downward direction. I'm sorry, I meant to say upward direction versus downward direction on the big picture. And the S curves that are in there, if this is distributive, can come very, very low. And I've I've already taken a lot of heat for this, even here with people that are generally pretty level-headed, about this idea of coming below 9 at all, and definitely not down to 6. But I did the chart again yesterday, and I was like, it doesn't have to be something that you like, but there's certainly a range here between 9 and 6 that has very good reason to be tested. Like very, very good reason. This little pocket right here, this intersection, is a very high probability zone. And it would have been better for them to have gotten an adequate distribution here that sells all the way down. I think the fact that this is so high doesn't necessarily bode well, but it does tell me that there's certainly a lot of competition, right? So if you've seen stuff like us, we've seen stuff like this on GME before, where you've got this really high build out, and the fact that this pushes above and then drops below would be very, very bad. And that's where we're at right now. We're not sure. It hasn't done that yet. But that would be particularly bad. That's more in line with what we saw previously here. And you can see it. I mean, I don't have to tell you, every little piece here. You can see the extension and then the drop. You don't really want to see that. You do not want to see that crap out like that. Even if it looks like it's strong, it's never going to drop. There's too many buyers, so on and so forth. It's about whether they can get institutions to sell off as well. And sometimes it just takes a certain kind of trigger to do that. So I'm not saying they're one-to-one. I'm not saying we're necessarily in that spot. Again, part of me wonders if we need that final push-up. They're not identical, but this is a pretty classic cat ear setup. And normally if I looked at something like this, and it's the way I'm looking at it, I'm going to make it pretty much the exact same. Normally if I looked at something like this and it came over that top, I'd be very concerned right there. I'd be very, very concerned that it's distribution. And the one way this doesn't end up in distribution is if this is like a really minor, like spring, for example, that then goes up, because that could be a situation of like an end of a reaccumulation range where it's going back and rechecking like a pretty severe, in this case, it'd be way down here, right? A pretty severe creek. I'm not buying it, like I'm not taking it, hand over fist saying, yeah, it's definitely going to do this. But that's the concern, is that drop. So I really do not want to see that on the whole. But if it did happen and recovered correctly, I still think you could get some motion upward. There's a lot of risk here. Why? Because this could be a signal of sign of weakness. And if you misread the range, which, people are prone to do, we're human beings. If you misread the range and this is a sign of weakness, this could just be like a UTAD, right? And then it comes down anyways. Why not? A UTA upthrust after distribution is exactly what it sounds like. It upthrusts after the sell-off. So if the sell-off proves to be distributive, that's a bad thing for GME. So there's a lot of contention right here in this particular range. And I have to see certain things happen in certain ways. Obviously, we're not there yet. But this is going to be a bit frustrating for a lot, because you're going to look at it and say, well, I think that it could be bullish. It's got to be bullish or this or that. All I can do really is look at volume and like levels that it breached. Right now, it made an advancement on decently high volume and then dropped really hard because of those announcements that were made for liquidity. And then you have, in order to get the monies right on the offerings. But then you have these really high volume sell-offs. They do stop short of making new lows. So there's a positive there, but I mean, just look at it. The last two times it's had these upthrusts, it's tried to come down and make new lows. It did it here. It upthrusted, went above the top, came down and tried to make a new low, and it did. And then it goes up again, and you're like, well, yeah, but it went up higher. It did. But it also successfully made a new low, which is not good. And what we said back then ended up being true. We were right. As much as I didn't want to be right about it, I said that this already had become a sign of weakness, because if you look at the only other ice that you have is this rising trend back here. That's exactly where we ended up. When this dropped down, I said, this is not good. It made a double low beneath that trend. So then it comes up and it sells off again. And the first thing that happens, it literally drops right beneath that trend. Like we're beneath the same trend again. So imagine, again, doing the same thing here. You might say, well, that's not the same. You kind of just got to take it for what it is in the market, and suggest otherwise is to be a bit disingenuous. Like, sure, it could be different this one time out of 100 times, but anything is possible in the market. But you also just have to sort of just take the chart with what the chart's showing. And if bears are successful in driving the price down through a support, and then they take it up and they do a distributive top and break the range again, or break the trend again, you're in trouble. And that's exactly what happened here. And then it ends up coming right back down beneath. It's a liquidity question. So what we really want to see is, what I'm trying to say is, we want to see a change of character. We want to see that this does not go to a new low again, ideally. So that's why I'm not like super concerned if it drops down here and comes below 2210. I don't think it's necessarily the end of the world. You just got to put it into perspective. If it's a spring here and it drops between 2250 and 2210, okay, like that could even be a little bit of a weakness, but ultimately it would have to then by August come back down if it were going to drop through that. But on the big picture, that doesn't really hurt us. Does that make sense? Like in the grand scheme of things, that's still a higher low right here than the previous bottom. What does hurt us is coming down beneath 2150, and specifically like kind of as the crow flies, dropping beneath like 2180. That could hurt us. That could very easily represent a bigger sign of weakness. That's where I run into the question of like, well, this happened before. They were able to successfully do like a double dip and get down lower, and then it came right back. The next time you come back down there, you're right underneath it. You really don't want that to happen here necessarily. So if we want to see it move up into August, that's what we need to see. So there's a lot riding on it. So I kept it simple yesterday. If you missed it, you missed it, but I just kind of recapped it for you. Those were the numbers. I think that when we look at this big picture, I'm not so concerned about fundamentals. I see that you're talking about cash per share value is like $20. I'm not so concerned about that right now. Again, people will say like, well, it can't do this or it can't do that. Look, GME was not worth, $300 a share or whatever. When it, there's all kinds of fundamental arguments. If you're just trying to get in the mind of a bear doesn't really even care that much. They care about the cash and how it's used. They know that that's a bad thing for the bearish case, because it could mean that they alter their business model or have an acquisition that drastically changes. All those things are true, but remember, like, it's as a brick and mortar store, if it doesn't transform itself, and the most transformative thing they've talked about recently is the future is in trading cards, playing cards. I don't disagree that that's a really lucrative business point, and it's probably pretty smart. But I also think that on the whole, I wonder if an acquisition will go a lot further for them. And buying up the Bitcoin is very divisive. It's very divisive. Some people think it's genius. Some people think it's dumb. It's pointless. But at the end of the day, it doesn't change their business model. Like, it's an investment, sure, but it doesn't change their fundamental underlying business model. It just doesn't. They're not an investment firm, right? So GameStop isn't that. So it's like you can make heads or tails of it if you want, saying that it's going to be good or bad for them, but I don't think you really can apply that to their business model. So That's the tough one. I don't think that's why. I think that's why it didn't really matter that much. They keep announcing stuff about it, and it's like, well, as it was going on, and it's like, I just don't think it's going to make a big deal in the end. And this is not right. This is not AMC. You don't have this huge debt problem and all this other stuff, but you're working a company out, right? You're trying to get profit and revenue up. And we're consistently seeing revenue misses 1, 2, 3, 4, 5 times. And you got to remember these estimations, they're not like, it's not somebody that's out there with a pole vault saying, how high can you jump? Oh, you can jump 14 feet. Well, I'm going to put this at 15 feet. And if you don't hit 15 feet, then we're going to sell your stock. That is not what it is. It's like somebody saying we can jump 14 feet. So they put it at 13 foot 9 inches or 13 foot 11 inches, like that's typically the way these work. They're not meant to be like ball busters, right? Like they're not meant to like really be impossible to get over. If you look at the way that most of these estimations are calculated, they're not lowballing it, but what they're doing is they're kind of saying like, this is just slightly below what we expect, like slightly, so that it's meetable, it's achievable. That's very much the case all around. So if you beat it, great. How much you beat it by is more important. Now, earnings per share here looks really good. Very positive, right? And that's a plus. I mean, it's been positive even though people thought it was going to be negative for a while, and it was negative back here. But, I mean, overall, that's been looking much better. If you look at the average amount of times it was estimated to be negative, positive, negative. This has been a pretty good winning streak for GameStop lately. And I'm a bit worried about that because it's very much a sell the news market. Like it's already elevated and it's during a time period when this has been positive. And we could talk about that for days on end and why that is. I'm not going to do that right now. But the point is like fundamentals, they matter. And I do think they matter because they're going to largely help curb that institutional trader who thinks that this is going well or not going well. But technicals are still technicals, and they're there for a reason. The idea that an operator would leave behind a liquidity pocket has to signal in your brain, like, why? The question. It doesn't have to be that it's inevitable that that liquidity pocket has to be retraced or that it must come back. Sometimes it's a dangling carrot. Like, it's this idea that, look, we know you want to go there, bears, but every time we get close, we're just going to go the other way because we want to load up on shorts, get the most ammunition so we can get the most bang for our buck. And a long operator will do that. A short operator does the same thing. We know you want to get here, long operators. We know you want to get here, institutional traders and individual investors. So we'll dangle that carrot. And anytime we get close, we'll get pretty darn close, but we're going to load up and go the other way. And that happens, by the way, long and short. And by the way, again, short and long operators will drive the price both directions. They're not always one directional. They like to do both. So the question mark here is not, to me, like, should the intrinsic value be met? Or if we drop below that value, will always be bought? I don't necessarily agree with that. You know, we're talking about a year and some change ago. It was down here. So it was below 20 for a long time. I don't think that it's impossible that we dip below there again for a bit of time. May not be forever, but for a bit of time. You know, and I would use the same model that we use on AMC here and just suggest that, and we did this again yesterday, it suggests that this is fairly par for the course. I mean, we don't need to make too many big questions out of it. Like the reason I have the S curve where I have it is because I think that's where it could be. But this doesn't mean this S-curve is going to be hit. And if it's not hit, then what you're really doing is you're operating on a massive double M, more than likely, where you've got, maybe there's a drop here. We don't know exactly what that looks like. Maybe it doesn't go higher. Who cares? But then it does it again, and so on and so forth. You can have these waves expand out because we know that this is the way that it starts. Every single right and left side looks like that. It always has the same start. Well, aren't we already on a left side or a right side? The left side was over here. Shouldn't we be on the right side now? Yeah, I mean, again, this is not meant to be like a catch-all for everything underneath the sun, but it is a way of understanding some of the moves in the market in terms of like where that begins. And it usually begins with a push up and then distribution into a buy up. The question mark isn't, are we necessarily, like the question for me is like, if you're on the right side, is this just part of the traversal, or is it the entire traversal? And then what happens after? That might sound a little bit odd, but again, I don't think it's that complicated. It's pretty simple. Because on the one hand, we would probably say like, obviously this looks really different, but we would say this does like this, for example. Okay. So I could make an argument that this is it, and it's going to keep going up. And really what we're seeing is something like this. And then we're going to have maybe a dip here at the end for a spring, but we really are not done yet. And then we're going to kind of reset, right? So it's a really tight wave. We're going to reset and do it again. Sure. And if you're doing it like this, and that's the general sine wave, I know it doesn't go all the way down. I'm aware of that. But I'm just making it flat for argument's sake. If you're doing that, then you're probably thinking that this is already above. The one thing is that like this hasn't checked that creek. So like you basically be saying, well, it's not going to check it. You have to sort of say that because that's the way it is. It's not going to check it. It's just going to keep going, which isn't normal. Normally it does. So that's one way you could say, well, I think this is going to travel up. It's going to hold really strong. It might have a small dip, but ultimately this is only half the move anyways. And then it's going to do the same thing again up here, Okay, potentially. You could also say, which is something that I often will do, is that this is like a cat ear. And if it does have another one, it could be a distribution where this is like a bigger ear. That's totally possible. It happens all the time as well. That's confusing, Booksy. There's too many options. Yeah, but if you think about it as like iterative, this being a top, it could be missing a second top. It's not that complex. And that second top, we could look at it, again, a number of ways. This could be the middle with a larger second top here that's slower, that comes down. That's kind of what I'm suggesting there. What about this other mysterious option that seems to go down first? Well, that one's not actually that mysterious. If you think about this as a wave cross, like so, then it really is just a sell down in order to get you back down to the creek. This is more traditionally what we would see on a bottom. But if that's the case, then this is not even, like, this could be very much like a long-term type thing. And we had talked about this, again, extensively. We talked about 2027. It was coming up quite a bit. If this ends up being the case, then you have now a new, probably you have a few new, but you'd have at least one more big cross that needs to happen. And this is where things become more or less like frustrating, because you can have a very long-winded kind of repeat of the same thing before you actually go back. And again, putting it into perspective is not that difficult. This then turns into a very large M cross on the bottom. So the theory here sounds complicated, but it's not. It's not that complicated. It's really just saying that. But that's every bottom and every top. So which is it? Well, I mean, it's kind of obvious that those that are very bullish on GME probably don't care about this stuff anyways. They're going to be looking at shorts, days to cover, failure to delivers, things like that. They're going to be looking at this like, well, it broke out. It's just going to break out again. And the thing is like, you can go back and look at some of GME's breakouts in the past. If you saw something like this as a breakout, I think it would be easy to just say, well, it's just a consolidation or it's just a wedge. But we already know that it pushed above the top, right? So certainly, like, I can see why some people would prefer not to do the complicated bit and just suggest, like, look, man, you're making it too complicated. It broke out. It's consolidating. Once that consolidation's done, maybe it has a spring, maybe it doesn't. But once it's done, it's just going to keep going up again, right? Yeah, you're right. That is one way to look at it. I don't see this very often in the market where you've got something like this, especially because this has already got to the wedge value. So it did technically break out to 80. It went there in extended hours, which again might be the argument why this isn't done, because it didn't allow you to get it in regular trading hours. It didn't hit in regular trading hours the $80. When I did the wedge target, it was like right when it was happening. And I'm sorry for all the uhs and ums today, but I'm just collecting my thoughts as we go. But I recall doing the wedge target on this and finding it to be very agreeable. There was a really strong connection to the overall because it's got obviously sufficient 1, 2, 3 hits on the bottom, 1, 2, 3, and then the fourth is a break on the top. That target was $80 or $85. And when we got there in extended hours, I said, well, that's interesting. It basically hit it as expected. And so it's essentially like a 618 break, but you take it to where the breakout point is right here. So just to show you, like, illustrate it better, I'm not just making stuff up. It really was like right at $80. Okay. So I was thinking to myself, well, it got there in extended hours. Maybe that's enough. Is it enough? I don't know. So does this work for the Bulkowski target? Yeah. If you can get enough ammunition to get back up there, it's a more satisfying Bulkowski target because it did hit it in regular trading hours. But if you look at extended trading hours and you were like, no, extended trading hours are totally valid, Booksy, then it already hit it. There's no reason for it to go back up again. So wedge breakout in this case doesn't have there's no reason to keep going. Like the liquidity, what that means is like, it's like cause and effect. Like the cause built up here already had its effect. So you have to have another reaccumulation here in order to say, yes, it's going to go up again. So instead of like, I'm using a bigger target, this is again a simpler way to look at it. You'd have to say, no, this area has to be reaccumulation in order to push up again. That's what I'm concerned about. So even trying to like simplify it into more basic breakout techniques, which are still statistically heavy with all kinds of data, like in the past, Bulkowski uses never less than like 600 examples. Usually it's like more like 1,000 examples. This pattern is great, but it's also could be done. And then you don't really have any reason to go up again. Well, that's confusing, isn't it? Why can't we just, this is why I don't like extended hours, because it creates these questions that we shouldn't have to ask. We shouldn't have to ask if it met it or not. We shouldn't have to have that debate, but we do. So is this correct from a Bulkowski standpoint? Yeah, if that extended hours didn't hit. Is this correct from a wave standpoint? Absolutely. And that's what I did yesterday. I think it could definitely hit 80 again. So all I'm really doing is going backwards and saying, well, how does it get there? Right? And if this happens and it has this dramatic spring, I'm inclined to say that it may be, that it goes from 17 all the way up to 80 again. But I'm very concerned about then what's next, right? Like what happens after that. That doesn't mean I think it has to be down here in the pits by the end of 2026. There's just so many like what ifs, because you have you have to sort of prove that it's going to stay up here, you know. And you say whatever you want, that's pretty darn close to all-time highs at this point. And really ignoring the all-time high and just looking at where was the distribution predominantly happening, it was really 85 at this point to 87 right here. Maybe slightly even lower, 80 to 86 or something like that, right in this area. So I could certainly see it as a means to get back up here and distribute again off the top level. I think from the standpoint of, again, big picture scenario, it does ask a lot of questions. But I've been doing my best to try to avoid those questions, aside from just the occasional like blurb here or there about it. Because it's not there yet. Frankly, most of us probably care more about the next move than we do 6 or 7 down the road. And it's hard to predict 6 or 7 down the road anyways without knowing how it sets up here. I would say that right now it's still in a tug of war. It really is. So there's still a tug of war between what we see as a upward trend and that downward S-curve, which still seem to have a lot of pull. And it's probably the reason why we're getting these massive swings right here when we had relatively low volatility for a good 6 months. Now suddenly we're getting these huge, huge swings like it's trying to pick a direction. And that's probably because it is. And to our benefit, I guess, we knew that this was going to be this kind of an area. We talked about the foretop being inside this region right here. I mean, it's pretty great that we called it. It's not very great that it didn't do anything particularly regular. Like it finished this one, which is great. It hasn't finished this one, but I guess it could. Especially if this is more long-winded, if it just built another wave. It probably could. My guess is that it did build another wave. I haven't tried it yet. This was the first wave. It didn't take that one, which is fine. But I can look at it right now and tell you, like, it's probably another one here. Yeah, that, again, building out 50-50 probably gets you right back down to the same spot, around 19, maybe even a little lower. So when are you going to change this chart, Booksy? Well, I'm not done yet, and I think that there's still a lot of questions in my head about it, but I think with this chart, a lot of the stuff that's noise here is really just me meandering. Like, what do I think could happen? This. The S-curves themselves were all pretty solid, and none of them, I think, at this point, except for the ones that have gone by, like this one and this one, that's just in the past at this point. They don't really need to be removed. So this chart is actually pretty solid still. There's not really much else to mess with. Like I try not to mess with this one too much. Again, aside from just occasionally like plopping a couple things on here, like I don't really feel like it needs to be adjusted. What was attempted here was to measure out what I thought was a reductionist move. And I still think if you look at where those compressions are, they were in the right spot. We're talking about compressing into to this area going into July, and then again eventually having some kind of a major move out here near September. And that's still what we're seeing. So nothing has changed about that. AMC, the same kind of idea. You have a big picture kind of a wave that, to me, is at this point, it doesn't have to follow it, but it's not necessarily going to change again. It's already kind of met, I think, where it needs to meet, and it's very similar in its timing and its stature to the GME wave. Very similar. Now, you might look at that and say, well, it's too high or something like that. Yeah, maybe. This was the argument that I was making about yesterday about perhaps this isn't going to be met until a second move later, and the first move is actually quite low. This would be very consistent with the 1-2 that we were expecting if you think it comes down, because it allows for, I don't know what the right way to put it is, but like more, I guess more downward motion, perhaps. And again, I don't really know the better way to put it, but essentially, if this only gets up to like 650 or something going into September, it does work almost better as an S-curve. You can see it visually. But for one thing, which is that traditionally this is not left alone. What we do find is that in 2020, this was met in the second run, that setup. So again, I'm almost more concerned about it if it goes up to like 12 right away, because I think that could be a distribution. I'm really concerned that this doesn't make a new low and it just goes up, and it really goes far. Like it goes all the way up to maybe $9 to $12. More likely it's going to be like 9 to 10, but if it goes up to that area, it's just me, but I'm not going to be expecting a second move. I'll be waiting very patiently, because it's a lot like August 2022, where it goes up, it kind of makes a breach over the creek here, which is great, but unless it holds that creek and advances, that is too much too quick, in my opinion. And it is just an opinion. Technically speaking, could it do it? Yes. If you look at the sell down that started in the beginning, or rather the buy up, and then the drop back down, if you look at the distance traveled, we did the mapping, and it would be right around here in August or something when we did it. What we did is we took that original distance and just applied it to the opposite side of the curve. So you have a curve up, down, and up again. Again, it seems like a numbskull way to do it, because you're like, well, anybody could do that, but like, why? Of course it's going to match if you measure from bottom to top and then bottom to top. Yes and no. It has to be, it would match, but it has to be a certain amount of time that has passed. So what I mean is, like, if you have a box, which, we do, and you were looking at this saying, well, it went up here and then this is the direction it was heading. Like, anybody who looks at this would say it's kind of a silly thing to take that and then measure it from the bottom and say, well, you're going to get up to the top again. Well, duh, it's the same measurement. But if you do it earlier, right, and you do that move early, then you're going to go above the top. You're going to go above that cross. If you do it at a particular time, then you're going to hit that without going above it, and it could be very precise. Well, that's kind of what gives us the timing factor, because one of the variables here that's not clear, or that has been harder to determine, has been time, which is how far that is. So it's the, if you're looking at it as like the hypotenuse, right, it's the one that's on the bottom there, the larger of the two sides. That could have been anything. What I've been saying lately is that this is quite low compared to what we saw in 2020. What we saw in 2020 was that this set up very, very high. And so it creates this like kind of a hyper compressed move that ended up being, and it's a little bit more dynamic than this, but it ended up being like a much bigger like setup as a result. So you get this very compressed like pump, right? And then it does it again and it goes back up, so on and so forth. And this is where you get the secondary range 2020, and then it goes up again, right? Yada, yada, yada. Okay. So this angle right here is very significant. It could have been anything. And what I've noticed is that it's the same angle that they used back in August of 2022, which is right here. This is what I was talking about yesterday. I'm trying not to like redo my chart again. I'm just trying to show you what I found again. This marker right here really takes you back. This has a clear 1-2 sign of weakness. So this spring right here is actually, again, a spring locally. It is. It's not wrong to call it a spring because it did drop below the floor. And it does react all the way back to the top of the range, and it does a 50-50 up. But ultimately, this is a sell down because it broke back into the range. Then it goes all the way through it, and because there's a weakness there, like it had already come down that low, that was really like both an SOW and a spring. And that's what happened going into May 2022. And then you get this buy back up. This is the jump over that like overextends. And like I said, there's a number of ways to draw this. And I know I've got it overextending multiple times. You might say it's wrong, but it doesn't matter how high you place this. On the first few points, there's no way to draw it where this doesn't come above. Always comes above, no matter how you want to illustrate it. So looking at where we are now on the big picture, we're certainly setting up this S-curve along that middle on that macro wave down. And so the rest of this is really just, do we get that second cross or do we just up thrust here and then sell back through like we did here? And I noted, yeah, that's there. And when you go back and you look at, again, this is just to reiterate what I was saying a minute ago. When you go back and you look at 2020, it's a little different because you have like a higher extension, and ultimately, yeah, it gets there. It does. In a pretty timely manner. If I were using the exact same method for measuring, I'd probably use this one because it's that first point right there, and then it uses it as a cross. We did that right here as well. It's the first point, and then it uses it as a cross. It's hard to see it. It's the dotted line. But it is the same marker. Again, it's just a copy paste of what I saw in August, that August setup 2022, which started in like the March setup. And then before that on the bottom, which I think it was like February or something. But this right here is that marker, and you can see it uses it as a whipsaw to jump out of there. That's the directive motion that you want to pay attention to, because it typically, again, it's the top here that's breaking down. It's the top of the wave that's breaking down. That's the directive motion that's going to tell you where you may go later. When it's done with an accumulation, it has to finish the bottom. Can't just magically go up there, right? That's what we've been looking for, which is great. So this is a similar motion, I suppose, if you wanted to use the same motion. And I mean, it's fine. I don't really care to, again, go too much on this because I think it's fairly self-explanatory anyways. This is ultimately like where the whip happens at the end, though. And you can see even in this, all three of these are used. Bottom, top, and middle. All three are used in the final output. Pretty cool, pretty clever, I guess. Sure. So what makes this so challenging is that right now, and I've got this white line, which isn't particularly helpful. Let me get rid of that one. Right now, these are the ones that we have. And they're correct insofar as I can tell that they are where they're supposed to be. You know, this orange one might be a bit high, I suppose. If you're using like this tippy top, that's where it is. If you use like the more consistent tops here, not the tippy top, it is a bit high. It should be maybe more like this. And that makes it look obviously better to the eyes because it looks more like now like, oh, this is actually in the center, you know, where it's supposed to be. This would suggest that if you have a two-part move, that part one, even if it lays up kind of low, it would break out here, and that would need to be where it breaks out because that's the side. So whether it's on top or below it, it would break out here around 630, 640, and then slightly higher. If it's slightly higher, maybe like 750. But ultimately, that's where the 50-50 wrap goes up to the top, and this is where you're going to have distribution around $20. Which works very, very, very neatly with the shift values because the shift values are like flipping perfect when you take the shift values and you apply them downward from the macro channeling down, which is this big picture channel all the way down from the beginning of the chart history. Pretty cool. And what we found is that then becomes a very consistent target for February 2026. It's not as high as we originally had thought maybe half a year or a year ago, maybe more like a year ago, because I had talked about coming down, but then probably coming right back up. But that was before I started really looking at what was going on with these shift values. And I got to say, even now, there's really nothing that's changed. Like, nothing has changed my mind to go backwards. So if you're wondering, like, hey, you picked out these shift values, couldn't you be wrong about that? I mean, it could be wrong, but so far everything has not proven me wrong. It's just proven more and more that that's probably the direction that we should be looking, because this is and that's just me saying, like, look, the earliest projections that I had were off. Like, that's all there is to it. I was missing pieces of that puzzle that later I was like, well, and now there's no going back. Like, I just don't see it. So what I'm looking at right now is, like, on balance volume, the setup here as it is, it's starting to look like a head and shoulder, isn't it? I wonder if that's how they're going to get that on balance to drop. It really does, doesn't it? I mean, it looks like a head and shoulder on balance. It's a tough one. It's still going up here. The price is not moving. That's why I was thinking we may still see that 333. I really think we might see it before it goes down. And it could go as high as like 360 if it does like a cut through the middle, but I'm curious if it makes a low first and tries to dip below the floor. Just look at that. Because of that volume, I mean, there's a high volume here on this low. Strange, isn't it? So anyways, I was looking at this thinking, like, this was going to be the key. This was going to be the easiest way to find it. The only thing that's been consistent about on balance has been that sell zone right here above 44. That was a sell zone that I had. There was another one right above the top here for obvious reasons. And then ever since then, it's not really done what we wanted it to do. Like, otherwise, it did come back up again. But as I started building out the chart more, we found that that was probably because it's not going to necessarily go as low right now as expected. And there's a secondary setup here that would suggest you may not come below like 24 million if this ends up being the big topping motion. Was the theory correct? Was this going to be probably going to be like a big move up to 4 in order to, and then possibly beyond, which didn't go beyond, but go to 4 to try to drive up the on balance before driving it back low? Well, half of it has happened. The other half has not happened yet. So I can't tell you that it's 100% correct, but half of it has happened so far. Time has proven it to be pretty accurate. It's hiked it up. And we really, if you look at where we are, we're in the same spot we were back in April, and the on balance is much higher. So it did its job to hike it up. Now we're going to see if they're going to use it to drive the price down when they go to a spring and really try to get that on balance below where it was here, which was like 31 million, and see if they can drive the price lower. That to me is the big one. And I know that on balance isn't quite that simple. It's really more about the movement, less about the number. I'm aware of that. But specifically, those numbers were used in 2020 as levels on the on balance volume. So yeah, big concern, I guess, is going all the way up to like 10 to 12 too fast. Lesser concern to me is just coming up to this region to basically accumulate above what is now the liquid center at 485, 480. That's where we said we thought it was going to be. Long time ago, it was like 485 would be the most important. And I think it still is. It's turned out to be the high liquidity mark, 480 to 485 region. So that area, again, that number has come up so much. I think the goal is to get above that and just hold support above that while also breaking out, if possible, above this. That should be the goal for bulls, above this downward widening channel that we've been stuck in for years. And then we did discuss, if it breaks out, doesn't that mean that this now widening should eventually be fulfilled. Like, shouldn't we go all the way up to the top of the widening again? This is where things got really interesting. So this was the 106. Oh, there it is. So I talked about that yesterday. Somebody said it in the Discord, and I was like, I didn't say 106. When did 106 ever come up? It's right here. It was on my chart. I feel silly now. Good. It's like my brain was like, I just don't recall using that number, but it's because it's kind of a newer number, I guess. But really, what it represents is the original opening price of the stock at this point, which is kind of interesting because it has shifted down from where you would have the widening up here, specifically at like, oh, that's creepy, at like 226. What? Did it go from 226.36 to 100? Is that what happened? No way. Wait a minute. Did I miss that? Am I just completely oblivious to the fact that that might actually be the case? How would you guys let me get away with that for so long? Nobody mentioned that at all. Guys, like, I don't know what you're talking about, Booksy. 226.36. 2.2636 was the variable that I found. Is this the reason why that variable was picked? It's not quite right, but it's really close. Wait, what? What? Wait. What? Was this the reason why it was picked? Because this was the target? And then they just used the division down to like 100? Or the original opening price? What the heck? Math is crazy. Why does it work so well? Yeah, it's weirdly, it is very important, this 226.36 variable. It's not quite perfect, but there's a lot going on right here around that number. I mean, there's a ton of information right there. I don't know if you guys can see that. Why would that be the case? I genuinely don't know. Yeah, price is moving now. That's good. It looks like a local creek jump. I don't know why that would be the case. I'll have to think on that for a while. Not quite over the other creek yet, but a good little price jump. And it looks like SPY's just sitting there. Market's not really moving. Sorry, this is gonna get me all kinds of like, what the? Yeah, it's popping a little bit. I mean, it's 1.8%. So let's keep things in a bit of perspective. AMC's up from like 0 to 2.4%. So that's a little bit bigger. It does look like SPY is climbing slowly. Well, I don't know why that number is the same. Yeah, it's okay. You're not going to hear me hype it up much unless we get certain things. I think 304 is going to be one that's contentious. It's still got like a dropping volume on this though. Let me check something real quick. It's pretty low. We're coming back to test the top now, so it's more or less like a moment of truth. Right there. So the volume on these bottoms has been pretty decent, but the volume on the tops has also been pretty high. So there's a lot of high volume here, higher volatility, which is tricky. If it were just higher volume with low volume, higher volume bottoms with lower volume buy-ups, it'd be a little bit more bullish. Accumulation tends to be really boring and like slow, and volatility is typically pretty low, but distribution tends to have higher volume, higher volatility. I don't know. This one's kind of different because it came after the news and it's an extremely high volume bump after a drop. So yeah, I'm a little bit nervous that it may not be what it looks like. And I know I said I thought it might come up again, but let's take a look at yeah, I mean that's a jump. That's also not the widest. I could draw it. I could draw it out here too. That's the bump right there. So there's a breakout here. Yeah, so I mean it's just a question of like holding levels. If it holds above 294, I think it's probably pretty strong. If it comes back down, just see if it goes below like 289, the recent low down here. You could probably put it at 290, but I would say 289. Top of 289 is probably the lowest. So that's a deeper retracement. So you could have an SOS and back up, and it would be okay. So I'm trying to say. That's not a. It doesn't have to happen, but if it does, that's where you'd want to look. That's all I want to say about it right now. I think you just need to be patient. This doesn't really bother me. There's 1, 2, 3. That's pretty normal. Market tends to separate levels fairly evenly, and it's usually like 50 cent to $1 intervals. In this case, they're only like 10 cents apart because it's such a tight area. But yeah, you can see those volume influxes at those specific 1, 2, 3 levels, and then we're really above this one now. So again, if it holds on, I don't see any reason why it couldn't push up to 310. 304 is one I'm really watching closely for gaps or gap downs. This is kind of the highest right here, this one. I'm just not a big fan of this kind of motion. It looks really similar to me. It's, again, higher volume. It's a lower volume, or a lower bottom. I'll tell you what, if this were a... Wyckofian range, I think it looks pretty good because it pumped here on a reaction and it never came lower, and then it jammed up again, made a higher high, and came back down. So just ignoring overall the volume and just looking at the price movement, aside from coming up too high, which it did, I feel like it came up too high, but aside from coming up a bit too high here, which makes me think this might be a distribution, it could be okay. Just AMC just doesn't use LPS very often. It usually has a spring. So it's confusing. It's different for like GME, which does have an LPS kind of often. Maybe. Just be careful with this one. Let's flip it upside down. Let's take a look. Let's see. Let's go to high, low. High here, low here. Yeah, there's a triangulation to like 316. That would be like a pivot right there, which is described correctly if that's the case, because it did just pivot. So it looks fine. It didn't come back down, so that's good. I mean, that's kind of obvious. You can see it. But if it drops back below here, like that 289, I think you would be really, you should be kind of concerned. You really concerned. I would not like that move, because that would be like a secondary upthrust. And it probably would capitulate through to a new low locally, I mean. Right now, this looks fairly tight. So I wonder, because that's the other trend here. So let's take a measure out and see what the doubling value is for that. I don't think it's that far. It's next Wednesday. Wednesday, July 16th. So then the triangulation, my estimation was it probably wouldn't come back to 333 above there. It closed at 330. But what I think this might be is the, weirdly enough, we'll see what happens. But what I think what might be is this is the equivalent of like the $4 move, but on this particular time frame right here. So it's doing it. Didn't come back up when it came up twice here. It tried, it didn't come back up. So I wonder, I don't know where this came from. I'm not sure what that is. I'm just going to leave it there for now. This works because you can see the cat ear, we can call it like a cat ear cross here down and then back up. So it's pretty close to 50-50 to this zone. So I'm thinking if it's gonna go up, it probably hits in this range from Monday to Wednesday next week, which is kind of a big area, isn't it? It's not particularly fast. So I had to change the character here because it didn't make the lower low, and then it did it again. Although this did dip below. It's very odd. It's almost like it creates a phase B bottom and then dips and then just takes off. Missing some of the bigger picture. It's too small for Wyckoff, really. You shouldn't be doing Wyckoff on like tiny ranges, but it does have a spring-like motion to it. Let's talk about where that 360 came from, because I said 360 and I didn't really explain why that was potentially possible. It has to do with the middle here being quite high, and there's specifically like a drop that occurs here that's pretty darn close to where I think that center might be. That's really far up there. And I'm not convinced it's going to do that. That was more in line with like the original thinking of 430s or 420s. I'm not saying it's impossible, but it'd be pretty weird nonetheless. It'd be really weird. Yeah, honestly, this seems more likely to me here, which is like Monday. I'll leave it on there. I'm not really sure why we should. The other one was the widening, and that one's a little different. There's like a middle. I guess I could explain that too, but so if you look at this as a widening structure here, then you can take this as like the widest portion, 1, 2, and then 1, 2, and then you can use a center mark. It's like right in the middle here between the 3 different spots on that widening, which might be a little hard to see on this chart because of the noise here. we've got an hourly 180 right above us. 304. GME's doing okay. It's up 2%. I don't really want to see this hook though, so I'd prefer, and it already looks like it's trying to, I'd prefer it not do that, but if it's going to go, it needs to like cross up and over. Because this is a different chart outlook. I think this is that big wave chart. The other one I had is probably better for this. Yeah. It's a judgment call, I guess. See, if it goes too far too fast and you lose the, like you did something like this, you go way up here, I think you run the risk of full sell down like really hard. But I will say this, that being said, what didn't happen is just as important as what is happening. What didn't happen is it did not seem to made that up thrust then drop, but it did not, I don't think it made like a new low here. So yeah, so that's really important. Why? Well, it shows strength. But remember, we were talking about like we really, even though that gap is open there, it's below here. We didn't really want to see it drop through that. So in the end, in the grand scheme of things, it may be okay depending on how low it goes. Don't want to see it break the ice way down here at 22.50. So I'm just keeping in mind, like, all right, let's say this is just a reactive move to come back up. Because right now it might be. I mean, that's very reasonable. This is a contested level right here, around 2360. So there's no reason to think it's really running unless it comes above there. Even more so unless it comes above really this 2450 area. So in looking at that, then let's compare that to the other model that we had. We'll put it in here. Which was this. It's pretty darn close. Actually, it's exactly what I had on here, at least at first. So I had it coming down and coming up as a possibility. It kind of did both. So first it tried to hold this, and it has this weird upthrust here this morning, and then it drops low, it dips below, and then it comes back up high. So it kind of did both, but it never drops into this blue range. Just didn't do that. It teased it. I'm looking at GME right now. It's fine. But this is where I thought you're going to have interaction with that S-curve. So I don't think I would be, I mean, I know it's cool to have movement, to see some big movement, but the way in which this travels is typically defined. See, this is weird because this is Monday here. What are you going to do if it just goes up there, man? I don't know. The only path I can think of it doing that is if it backs up here and then jumps this creek and it ends up on the top. Then I think you could have like a consolidation here. The waves don't change though. I still think that'd be the same. That would work. I just don't think it's as likely, so I didn't put it on there. I think we talked about crossing up and over yesterday. I'm just not a big fan of that right now. Yeah, I don't know what that's about. Right. So there's not really like the exact same comparison here on AMC, but I think what we do have is a similar comparison. We have a similar drive towards a similar kind of middle point. I really think what we're experiencing largely is that drive towards a pivot. I don't think we're actually necessarily, I mean, and I shrug my shoulders of stuff like this. I just trying to keep my head about me. I don't necessarily see this as the big upside. I do think it's like a middle point though. And then this would be like a middle of a middle. It's kind of divided into two parts. So take it with a grain of salt. The movement here is not bad. Don't get me wrong. But I could still see us having some consolidation and come down again. This could be like more like an auto reaction, and then we'll see. And actually, a phase B could be quite strong here. We could have it come up again higher and push the creek. I made it look like it was coming down and slumping, but if it's got strength to it, it could come up and push above here. It might look the same either way, and in one case it jumps, the other doesn't. But then if it goes down into a spring and it's low, it actually is very healthy because it avoided it here, but it also didn't make another low. So there's nothing wrong with it. It's dipped slightly below that 2250, I think. Let's see where that went. I went to a low of 2299. Hang on. Why did I say 2250? I think it was just where my mouse was. $22.53, and then this was $22.53. So it actually doesn't look like it dropped below it. But for whatever reason, it definitely looks like it does here. It's just a visual trick of my eyes. So yeah. Excuse me. So yeah, this is fine because now if it does an accumulation here, this is going to look really good. You can have a really strong like spring action later. I think it would be really good for the stock. I don't know about that gap, and I don't know if that's too much. It seems like a lot to me, but yeah, this could be very, very good. It does make me wonder if this is like this pivot in the end ends up being some kind of absolute low though. I'm sitting here staring at it like, isn't that where the intersection of the gap is? Like it totally is. I guess we'll have to question that. But that's not for now. That's like next week. It's a week away. Something to think about. And that's literally what I'm going to put on there. Something to think about, because it does matter. But I just don't know exactly why yet. Maybe there's a wave wrap here that actually terminates there. So he's saying it terminates on the upside. That 50-50 might apply to the downside as well. I mean, it could be both. It's the weird thing about the market, right? And you could have this kind of a candle where it's just boom. It's a bit long-winded, I suppose. What would it look like if it was both? Actually, it kind of makes sense to be both, because the length of this doubled. This would be the same length on the bottom. So there would be an actual, like almost like gravity, right? You're always pulling towards this marker. I made this really short, and like it breaks out early. But take a look at this guy. That definitely goes into that point as well. I think this could be the middle of the cat ear right here. It should be like right where it breaks out there. So this may end up, we'll see how the day goes. This may end up pushing up again a little higher here. But I would wonder, I'd be curious if it drops down almost immediately and then like reaccumulates here and then does it again. And this time it's like a bigger setup. This would be a really bullish setup, I suppose. I know, it's really different. Yeah, that actually is an equal measure of 3 parts. Down, up, down. To that middle. So it's actually already done a pretty good job of measuring it out for us, I think. Yep. It's pretty darn close. That's actually more accurate. All we're doing is, I mean, look, I know that the levels here are a little speculative, but I'm using what's already there. This is the wrap. So they've driven the price down, yeah, but they're wrapping around 2310. So it would make sense if you're going to do this to try to knock through 2310 again. So try to make an advancement, but it fails more than likely. And then you have a back up to 2310 if it does this. And that's a big if. But if it does this, this is where you normally get the second move that does advance farther, like it wants to go. But meanwhile, you're also jumping a bunch of creeks here. So you're jumping creek number 1, making a new creek here, then jumping in again, and then coming back. And I don't know if you have to come back low, but that would be the bear pattern. And then this measures out as essentially just a micro up-down schematic. So it's just where the ups and downs are roughly. I'm just kind of spacing them out. And that would be just a small scale up-down pattern. There's nothing really profound about it. And I mean, it works. It's pretty close. So again, dividing it into thirds, maybe even a quarter system would be better, but yeah, if it's going to go for a spring, this would make the most sense. And then you have a buy up here. It's like a series of LSPY type deals. But they would be pretty convincing as like reactive moves. You just chop into the corner. So this ends up being like a wedge or something. Yeah, and that's a 50-50 over that drop ledge, which is the most common place that you see it. You'll see me do these a lot. I'm always looking over. That's the text, that's why it's not changing. I'm always looking over at the side to see where that is. Relationship proportionally. It's kind of ugly, this one, and I'm not saying it necessarily has to go that low. The gap could be like a carrot. You just don't ever get it. They've already defined the floor here, so. But I wouldn't be surprised if it comes down again and dips like a penny below it or something. Like, so it hits like 22.53 or something like that. if it came back down again, and then it would bounce, and then it would have a final distribution down where it would basically drop below. Once the gap is filled, then it's like Monday the 28th or Friday even breakout, and then Monday maybe it makes that move instead of it being. Anyways, I'm going to leave that. I know it's a bit odd. This would be very bullish though, is all I'm trying to say. So this kind of a setup, wave 1-2. If you have another 1-2 down bottom, it's the same length. So it's actually just a down wave, and then this would cause a massive flux up. But this is also a little bit more like an AMC model, where it tends to go down for the spring. You'll notice that the other model here is actually not that different in terms of waves. I don't know if you can tell, but based on just the drawings, but it's actually very similar because you do get the same shapes. It's just a different timing, perhaps. And oftentimes, again, it has to do more with this early jump than anything else. So I don't know if you can tell that, but there's like, this is still an up wave, a down wave, an up wave right here, a down wave, and then an up wave. The difference is like where you are in the schematic because you've crossed up and over. And that is largely determined by, so this is up wave down. So instead of coming below and being range bound, you're above the creek. So you push up higher, you mark up into like the SOS. And then again, the down wave, instead of coming way back, it's either just an SOS here or it's an SOS with a backup. So it's like, where do you want to trade, right? And you could have both. I mean, you could have like an SOS and a backup. It's the same concept. So even though maybe they look kind of radically different to some, and they think, well, you're just saying it goes up or it goes down. It's really about the strength of the wave. If you look at the up and down motions, they're actually the same. And they should be. Because timing here on an M cross up will be the same as this S curve, would be like 1-2. Then if it's down, the M cross down is also going to be 1-2. It's going to be the same timing. Similar breakdown of wave structure, lengthwise. And they've already done this, so we kind of have an idea of, that's the top, that's the bottom, that's the top, that's the bottom, top, bottom. Should be fairly easy to follow. So the first one that I had, I got rid of it, but we had it hitting this marker, coming down, and then like sort of chopping low here. And that's just a different path. Again, that's a much weaker wave path. So 304 was a concern to me. It looks like it hit 302. Nope, hit 303. This is a big one for me. Watching it and looking overall at the big picture, I was trying to figure out what made the most sense here and why they had dropped at certain levels. 304 came up a lot previously. I mean, it's not the only time it's been used. It was the gap region over here on the 26th. So it's been used quite a bit to drop the stock down. And then it was basically where the support was here as well when it took off. So I had looked at it for other reasons, but I looked at it that day that I went and did all this work by myself. I marked off that the 304 middle actually leads to the 226 low in a very neat way. It's very clean. So, and I am a bit obsessed with that 226.36 low. So it's just a little spike. I think it's just an auto reaction right now, or a reaction from this bottom. There's a lot of buying here. So we'll see. If it holds up, I'm not saying it can't just go up. AMC is a little different. I think AMC, if it makes that jump, what happens, it's sort of the same idea as GME here. Like you have this high path and then a lower path. Both typically lead to the same spot, but it just depends. Again, if they both could be accumulative is what I'm saying. One's more of a rising build out. The other is just one that goes for a spring. I think you have a similar proposition here on AMC. I'm not going to do the whole thing, but I do think it's fairly similar. So 16th is this date. It's this middle date. So what we're probably seeing is same deal. This one has kind of a double whammy intersection. I wonder if it hits early and doesn't recover quite the same as AMC or as GME. Like, for example, let's say this went up into the 16th. You might say, well, then this is way off because this seems to build out into the 24th. Shouldn't they run together? I mean, they might. That's always a possibility for these tickers. But remember, August is just around the corner, and that's where AMC is. We're more or less expecting it to be at lows. We're going into earnings or just slightly after earnings, it might be dropping. So my expectations here are pretty light for AMC. I think that it's entirely possible if you got something like this and then it drives the price down, that AMC could be driving fairly low, so on and so forth. We also don't know for a fact if this ends up being the low pivot that this is going to just break out and go. We could do the same thing by sticking this over here and saying, well, yeah, it's going to go, but it's going to do this low or something. And that would be in line with AMC being down M1, M2, right? And this starts adding in a lot of time. I don't want to do that too much. But it is a question of chart fidelity. So, yeah, and this takes you to the 11th or 13th. That's not way off. That seems about right. So 1, 2, 3. This is like an SOS. And remember, because this is an M cross, yeah, it's easy to say like 1, 2, that should be going down or up or sideways, whatever. It's still the second wave here. The third one, again, it could be that that big build out, you know. So it doesn't have to be flat or downward. It just has to have the M set up. I think we'll know more once this one finishes a little bit better, whether up or down. Probably by about Tuesday next week, we'll have a good idea of the overall trajectory there. But this could be very much the case going into August. So for example, this might look like it's peaking a little later, which could be true, that it's in late July. And that doesn't make sense when you look at AMC because you're like, well, why would it be up here? And then, but again, let's say, for example, this does race up pretty fast. And by Monday, it's up here at 320 and then it capitulates. Well, the next move, if that happens, this is a bit of a change of character. So it'd be a tough one to argue because there's a lot of question marks here. I can't go into every little thing all the time because it didn't break below this. So there is that question. And I feel like that's a tough one. But this would just be a big hook, essentially, on the other trend. So if it stops short of breaking at 324, which is more or less my expectation if it gets up there, this is really just the final pump. And I would wonder if on that date, like the 18th, the 21st, that's the 18th. If this is actually where the market really dumps it, kind of makes sense. It does to me because you're propping it up for like OPEX. But then after it's done, you can just let it go. So you come back to this like middle level. And all this is this the next iteration. And what's crazy is like, then it has to do it again. weirdly, if it kept doing the same thing it's been doing, it may not even drop. That's my bigger concern, but I don't think that's going to happen. I think it's going to make a quick motion. So it's a little odd. So yeah, they can like hike it up and then keep it elevated into that Friday and then drop it. We're being really optimistic with GME. We're basically saying this is not going down when we say that, because we're basically saying that this is going to hold here and not create that SOW, which means you may not see 17, and it just goes off into the August-September move. Yeah, I don't know. That seems very possible. I'm speculating. I just felt like this was going to come up again because of the iterative nature of it, and I did my best to try to find it, and I think it's beyond that. I think beyond that 330, it's kind of breaking its own mold. So I don't think it's going to go above that. And then look at that creek right here, this white line coming down. That's what we just jumped over. So if you keep it elevated, which they're doing, and they're not checking it right this second, if you keep this elevated and you just keep going up and you buy up into this date over here, yeah, it looks nice for about a week. But then you've got this problem where you left this open. So then if you create a, that very stereotypical like cat ear nonsense going into like a Friday, everybody thinks is going to like blow up. That's not actually bullish because it's left this creek open. So then from then on, you basically just start capitulating. And earnings is over here on the 8th. There's the 6th right there, or the 6th, right? And that's the date. It's kind of perfect. So my timing on this part, these little bits might be a little off, but I don't even know what the heck this is. I'm not sure. I forgot why I did that. I think this was me mapping the iterations out, trying to figure out what might look like. Because the last time, this is what happened. It laid up onto that. It didn't actually hit it right here. It like laid up on top of it and then pushed away and came down. That's what I was looking at here. So the initial drop was quite steep off that edge. And then it drops pretty hard. So there's like a 1 and then 2 drop. Comes down like crashing down. But reality is very sad here because it's extremely this would be extremely steep if it does that. So yeah, that would be sort of crappy. I'm not so sure it's going to get that far. It really doesn't make a huge difference to me anyways. I'll just use the red line. I don't know why I use this blue line. It's hard to see it on the chart. It's just silly. This feels very strongly possible to me. So I'm just going to do like this. So first you'd have to come down and push through this low if that happens. Then you'd have to make, so it'd be a sign of weakness. You drive the price up again. That's like the last hook. This is then the one that sets up like you're going to go back up. They'd leave like a gap or something here. Probably around 304 is my guess. You leave like a gap and I don't know what would cause all this to happen. But you wouldn't actually be able to get back up there. So you'd think you're going to come back up. And I don't know about the rest of this. It's kind of a wishy-washy setup. It have to get steeper. Like, it just has to. So remember, like, big picture, it may feel a little bit off now, but we're really just talking about the same exact thing. Look at what happened here. If this is cat ear, the cat ear beginning to build out, right? you can see that hook. And then look at the same thing happening right now. See that? Like there it is again. There's the bounce into the low, and then there would be the hook, just like this hook. And then you're just going to do it again. But every time it does it, it gets steeper and steeper. And I got to be honest, I'm going to be pretty darn excited if that starts happening, because that means you're almost done. When you start actually compressing, it's a good thing. If I'm wrong and it just keeps going and it goes up here, I don't necessarily think that means it's completely wrong, but we may end up not seeing that low. And I'd be curious about that. I think it'd be for the worse, but I'm not going to repeat about why. I think in the end we kind of want to see it. Well, I think in the end it would be better to see it than if we didn't. And I'm not going to justify those reasons over and over, but yeah. So it's really the same thing iteratively as that, where you're pumping up. We'll see how far it goes. Highly skeptical it just runs from here. It'd be weird if it did. And then on the even bigger picture, just to kind of zoom out one more time, remember, like this is like the center mark on this huge wave. And in the past, it may seem like that's not necessary, right? But in the past, when we've advanced, for example, like back here, we advance beyond it. Sure, you get a buy-in. It's a pretty big buy-in, you know. When we come back down and really make that support on it, then you get a huge move. So it's better to make that support. If you, on the other hand, like for example here, there was already a weakness, but this one, it did push away from that region, but it distributes. If you don't hold it, then you typically are going to drive back through all the way to the bottom of it. So it's a danger zone in some ways. There's very few times where if it doesn't hold, it just bounces in the middle. It almost always goes all the way through it. So like where we are now, we've had a lot of traversal in that middle. I think it could be a little bit different, but just to keep that in check, like remember this pushed up away from it. It jumped over it. This is the same line from the very tippy top of this downtrend all the way a long time ago. So it did advance here, and then it advanced again, and it pushed away from it. That's where we got that big buy-in. So right here on the 22nd. So again, in theory, what we're talking about is an iteration that's just kind of being used to help drive the price down into a spring. But it is a spring, and you would be laying up on top of this. And as long as you don't break that, and I'm not going to keep beating on the same drum here, but it is basically like 226. As long as you hit that marker or close to it, get underneath there, I think you're checking that line again. There's a good chance you're going to have a pretty big move. So I'm going to be really excited if we can be at that region in August. It's a few weeks away. I think that's plenty of time to drop here. I mean, we did drop how far? 30% in 35 days. It's about the same. It's less time, but it's like 30% in like 26 days. And it's not that difficult to do. Well, it's just going to break out. I mean, higher lows are higher lows. It's always a bullish thing if it makes a higher low overall. Meaning as like a rule of thumb, it's a good thing. But I would just urge you to remind yourself occasionally of like the way AMC has at times traded with certain motions, and even if this somehow rocketed up to the top, you might think, well, it's never going to come back all the way. I mean, that's what happened back here. I mean, we went into like a change of character, got a double bottom, got a slightly higher low. We went all the way back to like the top of the range, and you're probably thinking like, oh, it's going, man. But then the very next move, yeah, there's an announcement, but the very next move is to come all the way back through the bottom. So just remind yourself occasionally that like it may seem a bit impossible to have it drive up even here, even if it went to like 420. You might be saying like never coming back down again. And I'm just like, no. Don't do that to yourself. Yes, it's possible that it just goes, but man, there's so many times in here where this has gone from like a low or just like bottoming to just a new high and still has these massive swings. So just be really mindful. And then big picture, yeah, there's a triangulation going into August, and I've got one of the S-curves just goes there. But I'm inclined to think that the August triangulation is actually the down point, not the up point. Maybe I'll be proven wrong about that and it'll run all the way up. I hope not, because I really don't want it to avoid a low right now. Because I think if it goes up here, it's going to come crashing down. I really do. I think it's much more likely you're going to just distribute and come back down to the bottom. It would be better for us to go ahead and do the sell-off down and be low and then get that spring and then reaccumulate up above 5. So I think that's going to be it for me. I don't really want to watch the price wiggle around here, and you'll be able to sort of take it on your own, I think, and with everything we've talked about, and really work it out for yourself over the next few hours. I'll be on tomorrow. If there's big news today with tariff stuff, you can expect market volatility. Right now, there wasn't clarity on it, so I talked about it first thing in the stream. I looked up news articles and people's posts on their social media junk, and I just didn't see it as very clear. So to me, it's a bit of wishy-washy, and I don't really know what to expect. I'm not sure if it's going to be trade deals or if it's just going to be letters about tariffs. No idea. Like, no clue. I do think that the market on the whole is not really in a great position for massive upside here. I do think there's a strong chance that if this hooks here on SPY, for example, it's going to come down and start making a bigger correction down towards 600 again. And that's okay. An SOS here is fine. You know, if you think that that's bearish, you may be missing the bigger picture, which is this still came above the top. And an SOS often has a consolidation along the top, not always above it. You know, we see that a lot with the bigger ETFs. Sometimes they're all above it, but they're almost always like some kind of interaction here. And you can go back and look at historical examples of this. When it doesn't happen, when you just leave, a lot of times that's a problem. You end up coming back later. It tends to be that the more you can kind of consolidate around the top, the better. So like, again, this one, we just kind of left and you're like, yay, but then later it's bad. Whereas here, you know, it did come down pretty low. It did come back here anyways, but there's a strong consolidation around the top, you know. I typically find that to be a lot stronger anyways, better foundation. So my expectation is not that this is like a bear market again or something like that, or the correction is going to be super absurd, but rather that I think is a good time for it. And going into August makes sense to me to have a corrective phase. And if not, I'll just shrug my shoulders. I've still got some targets that are a little higher, 330, 350. But I'm inclined to think, based on this setup here with the strength index, that it's about to be a rug pull of sorts. Just not crazy bad. well, it's flipping green. It's going to flip green. Well, it probably will. And I mean, that's the thing is like, this will be green until it creates another top. And then once it creates another top, wherever that is, whether it's lower or higher, I don't really care. Once it creates another top here, if this RSI is below there, I think that's where you see the follow through. So what we may be seeing on AMC and GME to some extent, these are kind of peripheral stocks, is that they're sort of playing catch up and getting themselves in a position where maybe there's more drop in store, I suppose. And yeah, I mean, it's possible this could last until next Wednesday, I guess. Do we have to keep dropping before anything happens? There's nothing new here. I'm not inventing new ideas. Like, this began right here in May, on the 29th of May. It was over a year ago, or a little bit less than a year ago, whatever it is. I don't know. There's nothing new here. This has been on the docket for a long, long time. Like every diagram I've drawn has us coming down to make a new low. If you're asking, like, is it possible that it doesn't drop? The answer is yes. But I'm telling you that historically speaking, meaning like when AMC has not done a drop like that, it's not been the best for us. So you may, if you don't drop here, let's say it consolidates higher up into the 30th, yeah, there's a chance right here that it could do something like that. And you might think that it's not going to go down, but you still have a rug pull, really fast at earnings before any kind of a move. So why count it out? You're that close. And if you don't, and it just dips down and then rockets, let's say it only dipped to like 257 or 258, something like that. And then it just goes, I'm not going to sit here and like keep questioning it. At some point, once this iterates so far, if it starts working itself out, it's working itself out. I'm not going to say, oh, it's going to go up to 477 and then drop again. You're not going to hear me say that. Like, this is it right here. I don't foresee any other kind of false upside move, because again, the model here is meant to get you to buy in so that they can then sell the price back down and dump this on balance, which they've propped it up nicely. They're doing the what you would expect here with the double pump here, but there's no downside yet. Once you get that downside, if it bottoms out higher, it bottoms out higher. Maybe it makes a lower low and this is divergent. Maybe it makes a lower low and it's not divergent, but it's at the lower level. Maybe it dips down and this does make a lower low, but the price is elevated. It's sort of a hidden divergence. It doesn't really matter to me. I'm just going to be watching it carefully. Once that next break happens, if it jumps the creek or heads on up, it heads up. So if the question is it possible it just makes an LPS? The answer is yes. But I'm just telling you that from experience, that's not typically what's happened on AMC. There's been very, very few times where that has happened. I can count on my hand only two in my head that I can think of, and they were not the macro move, big moves. A lot of them were smaller moves. The one that's actually kind of a bigger move is the August, but that bottom is tiny. And that's only one example of a setup like this just not going low again. What I see is an iteration. Basically, you're seeing like a repeat of the same things over and over again. This hits down, it hasn't come down to a low. This hits down, it avoids going to a low. It hits down, it avoids going to a low. But if one of them hits a low, they all hit a low. Like if the big one hits a low, then they've all completed low. And that's what makes it tricky. You just don't know until the very last second. what you can do is look at what's happened in the past and say, this is more likely what's going to happen. You can look at where they're aiming. This is more likely what's going to happen. And when it doesn't do that and it just rockets, sure, it feels good, but there's danger in that. Because in the past, if it goes up too fast and it doesn't check that side and then build out across it in a healthy way, just rocketing past that creek is not usually a good thing. And we've really only done that, I don't know, 6 times. And it's shown us every time the reaction is not pleasant. You know, and this is a big one here, but every other time it's kind of pushed up rapidly to that marker, it's been bad. Like, we need to see it approach and then cross over in a healthy way on a big scale. It's essentially the same thing that happened here, where it's like a reaccumulation in a particular range. That's where I've got it. So I'm not saying it can't happen. If you hear me say that, then you're not listening, because that's not what I'm saying. I am saying, though, that there's a much higher probability that there's a spring. And that's been the same exact thing we've talked about forever and ever and ever. It's 100% observation, right? And analysis. It is not me like spinning the dice saying that I'm going to make it happen this way. You know, I can't affect how it moves in the end. All I can do is look at the chart and analyze what seems to me most likely. And if we get it right more often than not, great. We're probably making good money. But I understand the frustration if you're just like holding shares. You're like, why does that keep dropping? But like, this is not anything new. And really, I keep beating on the same drums. I'm sorry, but I'm just going to end it at this. I did a video in January 2024, which is over a year ago, that talked about coming down to 250s. And technically, there is a $1 target as well. You know, that is not a joke target. Like, it's a real target that bears have apparently triangulated a few different ways, a few different times. I even said the same thing back here when we were doing the combo chart. And I distinctly remember somebody saying that it will never, ever do that. But now, like, the combo chart value, it's basically already done that at 239. It's essentially like equivalent to the original valuation being near $1 and some change. If you look at where this is compared to where it originally was, it's actually below $1. If you look at it that way, but I'm not even doing that. I'm giving it an extra 226%, still about $1. So, I mean, AMC is a problem child. It's got issues. We're really tracking a counter play here. I got people in my own Discord group saying that it's nonsensical, right? That it's hopium to call out for double digits right now. And I'm telling you that I don't think it's hopium. I think it's just math. I think it's the way it's set up, but we're going to have to wait and see how it all shakes out. So that's it. I'm done. I hope you guys have a great one. I do. I will be on tomorrow. If something crazy happens, then something crazy happens. Maybe I'll do a short video or something if something crazy happens, but just keep your wits about you. Don't be overzealous for every little move. Wait for the confirmations, you know. And if you're making money, make money. You know, don't sit on it too long. That's just common sense stuff. You don't want to sit on profit forever. So, that's great. Hey, Nicholas, I really appreciate you saying that. I can see patterns and connections I couldn't see before. Yeah, it's hard. I mean, it's hard to wire your brain for something like this, especially if you're not really, maybe you don't really like math or you're not really a big visual person. In either or could be missing, and you'd feel pretty challenged by some of the stuff that we talk about. But I like math. I like, artwork and visualization and proportion. But I also think that just bringing it, like you said, down to like direction and pattern, that's really important. It's just behavior pattern, and like things that you start noticing and you're like, oh yeah, that's a behavior pattern. That will help save you. And if it saves you once, hey, it's one time that it prevented a bad trade. You know what I mean? Like, that's good. Any little bit helps. So even if it's only like, oh, I used that one time. Well, that was one time more than you could have before. So that's great. I do really appreciate you saying that, though. You guys have a good day. We'll talk to you later.